Hello, and welcome to House Lux Estate, your go-to channel for insights on global markets and investments. In this exciting journey, we unravel the intricate ties between geopolitical events and the global markets. As investors, it's crucial to comprehend how international politics can sway your investments. From trade wars to Brexit, these global shakes carry a powerful influence on the financial landscape. So, without further ado, let's dive into the world of geopolitics and its impact on your investments. First, we need to understand what geopolitical events are. Geopolitical events are incidents that occur on a global scale, which can change the political, economic, and social landscape of countries involved. These can range from elections, trade wars, treaties, to even shifts in power. Now let's break that down a bit. Politically, these events can lead to changes in leadership, policies, and alliances. For instance, an election result can lead to a shift in a country's foreign policy, affecting its relations with other nations. Economically, geopolitical events can have a significant impact on markets and trade. A clear example of this is the trade war between the United States and China. The imposition of tariffs by both sides led to fluctuations in global markets and affected the economies of not just these two countries but other nations as well, due to the interconnected nature of global trade. Socially, these events can lead to changes in societal norms and behaviors. Brexit, for example, sparked a wave of changes in the United Kingdom and Europe. It not only led to economic consequences like the devaluation of the pound, but also social ones. The decision to leave the European Union brought about shifts in the UK's social fabric, impacting everything from immigration policy to attitudes towards foreign workers. Geopolitical events can also create ripple effects that spread beyond the borders of the countries directly involved. The U.S. China trade war, for instance, impacted global supply chains, affecting businesses worldwide. Similarly, Brexit had implications for countries outside of the UK and EU, as changes in trade agreements and regulations had to be negotiated and navigated. These examples illustrate the far-reaching impact geopolitical events can have on the world stage. They can reshape political landscapes, disrupt economies, and shift societal norms. And with globalization, these impacts are felt more acutely and quickly than ever before. As you can see, these events have far-reaching implications on a global scale. The understanding of these geopolitical events, their causes and effects, is crucial to making informed decisions, whether in politics, business, or even personal finance. The world is interconnected, and these events, in one way or another, touch us all. Let's take a closer look at Brexit as our first case study. Brexit, an amalgamation of British and exit, refers to the United Kingdom's decision to leave the European Union, a move that was finalized in January of 2020. This geopolitical event sent ripples across both the UK and global markets, serving as an excellent example of how international politics can influence financial landscapes. The announcement of Brexit in 2016 brought about an immediate wave of uncertainty. Investors worldwide were left grappling with an array of questions about the future of the UK and its economic relationships. This uncertainty was reflected in the stock markets, with the FTSE 100, a share index of the 100 companies listed on the London Stock Exchange with the highest market capitalization, experiencing significant volatility. The value of the British pound also took a hit, dropping to its lowest level against the dollar in over 30 years. This depreciation made imports more expensive, which in turn led to increased inflation. On the flip side, it made British exports cheaper, boosting overseas sales for some UK companies. Furthermore, Brexit had a substantial impact on investment decisions worldwide. With the UK's future trading relationships hanging in the balance, many companies held off on investing in the country until a clearer picture emerged. The real estate market also felt the tremors, with London, a global hub for real estate investment, witnessing a slowdown in property sales. Yet it's important to remember that while Brexit brought challenges, it also brought opportunities. The fall in the pound's value attracted foreign investors looking for cheaper assets, and some sectors, like manufacturing and exports, benefited from the currency's depreciation. In conclusion, Brexit serves as a stark reminder of how a single geopolitical event can send shockwaves through global markets. It underscores the importance of staying informed and adaptable in an ever-changing global economic landscape, where the political decisions of one country can have far-reaching implications for investors worldwide. Next, we turn our attention to the U.S. China trade war. A geopolitical tussle that rocked the world, this economic feud between two powerhouse nations has left indelible marks on the global markets. Our story begins in the summer of 2018 when the United States imposed sweeping tariffs on Chinese goods. This was a dramatic shift from the norms of international trade and was instigated by allegations of intellectual property theft and unfair trade practices by China. The Chinese government responded in kind, leading to a tit-for-tat escalation that came to be known as the U.S. China trade war. Now let's look at how this geopolitical event influenced the global markets. Stock markets worldwide experienced significant fluctuations as investors grappled with the uncertainty of this new economic landscape. The Dow Jones Industrial Average, for instance, saw its worst December since the Great Depression in 2018, largely due to trade war fears. On the international trade front, the conflict disrupted supply chains and led to shifts in global trading patterns. Countries found themselves having to choose sides or find new trading partners. This reshuffling of alliances affected businesses large and small, from tech giants to soybean farmers. Investment strategies also underwent a radical transformation. As the trade war raged on, investors began to seek out safe haven assets, such as gold and government bonds, to weather the storm. This was a clear shift away from riskier investments like stocks and real estate. And while the U.S. and China have agreed to a Phase 1 trade deal in early 2020, the reverberations of this trade war continue to be felt in today's markets. The global economy is still recovering, and the lessons learned during this period continue to inform investment decisions. The U.S. China trade war underscores the importance of staying informed about geopolitical events as an investor. Understanding these events allows investors to anticipate market shifts, adjust their strategies accordingly, and potentially turn a geopolitical crisis into a profitable opportunity. So, how can investors navigate global markets amid these geopolitical events? Well, the first step is understanding that geopolitical events can and will influence the global markets. Whether it's a change in leadership, policy shifts, or international conflicts, these events can create volatility and uncertainty. One strategy to manage these potential risks is diversification. By spreading investments across various countries, sectors, and asset classes, you can cushion against the potential losses from one specific area. It's akin to not putting all your eggs in one basket. Diversification doesn't guarantee profits or protect against all losses, but it can help manage risk and potentially enhance returns over time. Staying informed is another crucial aspect. Keeping up to date with global news and understanding how these events can impact the markets is essential. It's not just about being aware of the events themselves, but also understanding their implications. This means diving deep into how these events can affect different sectors, countries, and asset classes. Finally, seeking professional advice can be beneficial. Financial advisors, for instance, can provide insights into how geopolitical events may impact your current investment strategy and suggest possible adjustments. They can also help you understand the potential risks and opportunities that these events present. But remember, while geopolitical events can create volatility, they also can present opportunities. Some investors thrive during these periods, finding undervalued assets or identifying trends before others do. The key is to approach these situations with a balanced perspective, understanding the potential risks, but also recognizing the potential opportunities. So, to navigate global markets amid geopolitical events, remember to diversify your investments, stay informed about global news and their potential impact on the markets, and consider seeking professional advice. Remember, knowledge is power, especially when it comes to investing in volatile times. In conclusion, geopolitical events have a significant impact on global markets. These events, from Brexit to the U.S. China trade war, create ripple effects that reach far beyond their points of origin. They shape the economic landscape, influencing market trends and investment outcomes. We've explored how Brexit led to currency fluctuations and altered the investment landscape within the United Kingdom and Europe as a whole. Similarly, the U.S. China trade war showed us how tit-for-tat tariffs can disrupt global supply chains, impacting industries and economies worldwide. The key takeaway here is that as investors, we cannot afford to ignore these geopolitical events. They are not mere footnotes in the annals of history, but significant drivers of change in the world of global markets. Recognizing their potential influence allows us to make informed decisions, helping us to navigate the often tumultuous waves of the investment world. Understanding geopolitical events and their influence on global markets isn't just about staying informed, it's about staying ahead. It's about positioning ourselves to respond proactively, rather than reactively, to these events. It's about turning challenges into opportunities and uncertainty into certainty. So, let's keep learning, let's keep growing, and let's keep investing wisely. Let's continue to unravel the complexities of the global markets together. Thank you for watching. Don't forget to subscribe to House Lux Estate for more insightful videos on global markets and investments. Stay informed and invest wisely.